Another weekly market pulse. Hope you're doing great. Let me get right to it. We are in a yellow market. That basically means that we're coming out of a red and now we're in yellow. What do you do when it's yellow? Either you slam on the accelerator and you go through the light, or you stop. I don't know which one is the correct one. That's why we're yellow. So we're in the third day basically of a yellow market. It doesn't feel awesome to me. And that's why I use market timing, because I try to be objective, not subject myself to my own opinions. But what I see is that who knows? I think we got maybe slightly more downside potential than upside potential at this point. But let me share my screen and I'll show you what I just talked about, at least somewhat, in our mastermind group. We had a really great discussion about the red markets and about how you can go through tough markets. But you could see this is last week, and we had 4 red lights. This week we've got 2 red lights and basically 2 greenish lights, right? And so we're starting to build the upper side of this. One thing I will point out to you is that and this is the New York Stock Exchange Index. We touched this back in December. We touched it again back in January, and wouldn't you know it, we touched it last week. So interestingly enough, it bounced right above that, and now it's above its moving averages. So it looks like it wants to go, but it needs more volume, as I'll show you in a second. And so volume is like the color commentator of the play-by-play, which is the price. And so looking at the NASDAQ, you can see this big leg down, this little foot coming forward, but you can see even on the bouncing days, it's not a lot of volume, which tells you that the buyers are not coming in. If the buyers aren't coming in, the sellers are still in control. Maybe they're not selling actively, but they may sell actively as these things start to come up to the 200 or the 50-day moving average. And you could see also this 50-day moving average is rolling over, and we have the potential for maybe next week, week after, to go through a death cross. And a death cross is something that's pretty recognized on the street. And once you get death crosses happening, you start to see stocks really selling off most of the time. S&P 500, you could see that down below the 50-day or the 200-day moving average, certainly below the 50. It's also rolling over and it's bouncing on low volume. So it's not a real bounce is the way I look at it. Dow Jones, this one's still below the 200-day moving average, trying to get back up there, but notice how the 200-day is now resistance level rather than a support level. That's a problem. And then here we've got the New York Stock Exchange, which I just talked about, but it's at least above the 200-day moving average. That's a saving grace, but it's not above the 50. And when it's bouncing, it's not bouncing with volume. So all of them are trying to bounce a little, at least this week, but that's not helping us, right? The volatility is still fairly high compared to where it's been. It's above the moving average. That means the panic is a little bit higher than normal. The sellers are kind of more in charge, like I've said. Apple, it's been, from 260 to 219 to a bounce to 250. And then it kind of completed, down to 209, 208, something like that. It's bouncing today, but, you might even know, I've got a small position in Apple that I just started, but basically I think 195, 196 is still potentially in the picture for Apple. It's making this little dreaded H pattern, which I don't really like. And Tesla, big, long leg down, and now it's at least starting to find some footing here at the bottom. We'll see if it holds it. At least a couple of days where it's kind of stopped going down have been on good volume, so that's kind of nice. Bitcoin, IBIT, a lot of people trade IBIT, and it's bounced off the 200-day moving average, and now it's trying to kind of hold, and obviously it depends on what Bitcoin does, but that one looks good. MicroStrategy has got a really solid bounce off the 200-day moving average, but it's below the 50. So I still see it bouncing back and forth between the 200 and the 50, but I'm playing MicroStrategy now to the upside because it's got a couple of indicators that I look at that are telling me that it wants to go back up and that a lot of the sellers have been pushed out. So we'll see what happens with MicroStrategy. Palantir, bunch of people were buying Palantir all the way up to 125. I was warning that there's a gap at 41. There's a gap here at 85. It came back and filled that gap. Sometimes the trees don't grow to the sky, everybody. So, you got there's a lot of profit taking here. You could see it in these high volume red candles. And so now it's below the 50-day moving average, trying to go back up, but it's got to get rid of all this selling. There's overhead supply there. So watch out for for Palantir. NVIDIA, notice a death cross here. NVIDIA to me is rolling over. I've been saying don't be buying NVIDIA for a while, and it went all the way up to 153, and it's a great stock. We love it. We know what they're doing. They're going to change the world with AI, chips, going to put a ton of money into the United States, all these other things. But the stock is tired, and these sellers have been in charge for a long time now, and you could see that with death cross happening. Microsoft, I wouldn't touch it. Alphabet, I wouldn't touch it. And AMD to me is the stock I'm looking at. If you want to go bullish on something or start getting your watch list ready for going higher, AMD to me looks like it's finally done selling off. I have no idea, but it's at the bottom. I'm not a bottom fisher, but if I were going to buy a tech stock, I wouldn't buy like NVIDIA that looks like it's on the way down. This one could still be on the way down, by the way. And but you're seeing a lot of lower lows, and at some point it bottoms. And the fundamentals of the company are still too good for this company to be cut in half or whatever it's gone down this year. So I don't know. I like it. I'm not buying it today, but I'm buying it when we get a green market or something like that. I'm looking at it. Mercado Libre, I've talked about it for a couple of weeks. Tried to break out, gap up on numbers here. This is the Amazon of South America, and it's bouncing off the 50-day moving average and building cause to go a little bit higher. I don't know. I like the way the chart is setting up on this. I'm not buying it today, but we get a green market and a tailwind, I might look at that. But I am looking at the insurance companies. They're all near their highs and wanting to break out of these constructive patterns. So there's some shoots coming out of the ground from the seeds that we've been planting, and you need to get your watch list ready in case we go green, and you need to get your watch list ready in case we go back to red. I'm still leaning slightly to we're going to red based on some of the studies that I've done. I just put a video up about past history and how it repeats, and you got to look at some of those past history to see where we're going. Don't try to predict, just try to kind of mirror or use probabilities in your favor. Anyway, I hope you are doing great. We had a yellow market, at least that's good. And I hope you have a fantastic weekend. I'll see you in a week on the next Weekly Market Pulse. Thanks for joining, and take care. Bye.